Doc here from North America. Didn't get this thing going fast enough. I'm sorry about that. Let's see what we got going on today. Let's see, where's it at? Right there. Looked at the wrong clock. Next thing I know, it's further over than I want it to be. Let's kill that volume on the machine here. There we go. Let's see, what do we see here? At least Morgan Stanley beat the earnings. That's nice. We got one bank that's actually doing it right. So that's kind of cool. Where's it at? Let's get the Chicago charts up there too. There we go. And let's do this. There we go. And that's the Nat Gas. Let's check out the Swiss this morning and see what it's doing. That's the dollar index. I'm a little surprised it's even more firmer today, but we'll see. Oh, you can see there, it's trying to move back down again. I'm not totally confident we're going to see a strong, steady dollar. I just think we're going to see a drifting dollar at this point. And we'll watch to see how it comes down to this range. As long as we're in that weekly sell, I think we're coming down. American government coming in over the next year and 2 years and 3 years. So the fear of inflation is not necessarily that tenacious. You know, it's not that strong, and that's the reason why it's not that strong. We're not super paranoid about what inflation could look like and how hard it's going to get rid of, how hard it will be to remove, because most of it is just government policy, and government is disappearing. You know, in other words, Mr. Biden's having I think he's having a press conference tonight or today or somewhere along the line, and he's going to tell us how he cares. You know, but he's not going to change any of his policies. He's not going to really, maybe he'll get rid of one person, I don't know. Maybe there's a sacrificial lamb. You know, it's like that Cain and Abel thing. I don't know. Maybe it's like that Abraham. Last minute, God takes some of the responsibility, and in the last moment, he'll find a way of saying, but it's not really his fault. It's just him trusting other people. I mean, it'll be something of that nature. And so that's where we really stand at the moment. We're watching this whole thing play itself out. And in the end result, the markets are looking beyond that, which they always do. Markets always look beyond that stuff. I mean, think of the August 1982 rally. Double check this. Yeah, I do hear myself. Okay. So let me just close that and start it over again. Let's see, right there. Open it up. There we go.
Can you eat potatoes and lose weight?
This is a potato.
There we go. That looks a little bit better. I still don't see any questions on there, but that's okay. So that's my, you know, what is inflation? That's what this talk about is, you know, the first opening of this.
There we go. That looks a little bit better.
What is inflation and how long will it last, you know? And that's how we really, you know, that's how I'm perceiving it at this point in time. So I'm looking for pairs trades to be more firmer against the dollar for like the next 3 to 6 months. And that seems to be and we'll see. We'll see if this rolls over. You know, it's made its little bounce from this top end of the range. This is the top end of the range we've been following for a year and a half. Let's just scrunch that up for you. You can see that it's been just cruising along there. Every time it gets up into this area, you know, you had some real pushes here at one point or another. That's back in January of last year. And, you know, in the end result, it's played that range pretty well. You can see it's bounced off of it, you know, went down to the bottom outside of the range. We talked about this back then. We said, you know, it went that far out of the range, more than likely to go that far out of the range on the top, and it did. It was like literally an oscillation, you know, and so we'll see how this rolls along, but chances are that is what we're going to see. You know, the ranges will be, what's the word? It will survive. I don't think we're going to see any calamities. Where was I yesterday? I was somewhere last night. That's right, I was at a meeting last night, a Tea Party meeting. You know, in other words, you know, from the old Tea Party. And one of the things someone was saying something about the dollar being killed and destroyed. And I'm like, no, the dollar's doing fine. It's doing fine. Now, they're going to try to measure it against gold and silver for a long time now. When we do deal with gold and silver and we have traders looking at gold and silver, that is the tough part. We feel sorry for it in a sense. We're like, oh, darn, it should trade. It should trade. You go back and look at it historically. Yeah, it's not doing too bad. I mean, we're looking at gold trading at 1,800. That's not too bad. And then when you look at the silver, we're looking at $7-8 silver. Even now, silver's trading in the still, 4 times more than what it was, or at least 3.5 times more than what it was. That's for sure. Let's just take a look at silver real quick on Dukascopy. Go over to J4X. Right there. There's silver there. Yeah, 23.72. So I mean, it's just that it doesn't move the way traders want it to move, but it does move. And long-term investment, it's a good long-term investment. And I'm talking long term. You buy it and you park it and you forget about it. And then come back and look at 10 years later. A lot of traders like to, because we see interesting moves in the product, would like it to trade more like a stock indice. I know I would like it that way, but it doesn't. And it doesn't follow the fundamentals. I would like it to, but it doesn't. In other words, the moment they scream inflation, you would think the thing would run 200 or 300 points, but it doesn't. And that's probably because of everything I just said previously to this. This inflation may not be that tenacious. It may not be that powerful because we're going to see a change of government very dramatically. Oh, that felt good. So what we're going to see now is we just need to see a couple signs by the Federal Reserve to make it look like they care and they recognize the problem. That's all we need. Because then Federal Reserve recognizes that. That's a good thing, Boy, I keep on seeing ding. Let me just answer this group of emails. On webinar will respond after. There we go. There we go. So, I guess that's basically, the gist of it all. Now let's go over and take a look at the euro this morning and see how that's doing. And there you can see the euro is pulling down. We're a little. I said, and then there's nothing to replace it at the moment either. Okay, yeah, look at it. It's trying to base itself off of the. Let's see, what is that? The 0.38. And that's what we figure. We try to support itself there. This will probably try to turn up. This is the weekly looks comfortable on the upside still. And you see it there. The white line is moving down and below the dashed line, and we got 3 red hankies and so forth. So that's all right. And we'll see where. I don't believe we're going to check this bottom out here. I think it's just going to find a higher low and try to turn back up again. All right. Move over to Mr. and Mrs. Cable. Let's see how they look this morning. Right there. You can see same situation, being pushed down, but is it really taking that much of a hit? Take a look and see. We got what we wanted out of it. It ran up into that 50 percentile and stopped. And it's already doing a little teeny weeny little bounce off of the 0.38. And the weekly is not really screaming at us in any profess it until the math shows us that it's not there. And that's probably the answer to all of it. It's basically a historical point of view. In other words, it has many stories. We've seen Mr. and Mrs. Inflation have some profound effects in different ways. And so one of the things that we in the 20th century or the 19th century, in other words, is it the same animal or is it a different one? you would have to assume we have blockchain. You know, you have to be relevant compared to what they are today. Hey, Douglas, how you doing? Good morning to you. You know, we had a whole different system altogether that worked totally different than what it does today. You know, we have monies that can be transferred in a matter of minutes and seconds, literally seconds. We have statistics. We don't have to wait to the end of a month now. I mean, you know, inflation and economics has changed dramatically now over the last, say, 30, 40 years. And I mentioned it yesterday. Boy, I can remember the times where when I was clearing Swiss francs or Japanese yen was even a day later. I think it was 2-day clearing for European currencies and 3-day clearing for like Asian currencies. So, you know, the movement now, you can move that stuff in a matter of seconds. Literally move it in a matter of seconds compared to 3 days. Imagine waiting 3 days for a delivery or something like that. And that's what has caught my eye totally, is the fact that we are not trapped in that situation whatsoever. Russell and S&P 500. Let's check it out. Let's see. To start off with, let's throw the. Let's see, where's it at? Let's put the S is good. I did look up all that stuff I said I was going to. USA 500. There it is, USA. Let's try that again. And what we're going to do is we're going to put it up on Chicago Quant, and then we'll go do that again. So there is the S&P 500, which was trying to show some strength. That shouldn't be red. That should be green. There we go. There we go, like that. So it's trying to lift up. You can see it's coming through here. It's the only indice of the more time. And it's loading up. And it hasn't started to do its little bounce yet. It's got that line still heading down, whereas we've already pierced it. That'll straighten out in a matter of minutes. Not minutes, hours. You know, a couple hours, and J4X will start to represent that strength going in. And we're seeing a little pop up, you know, today, so that's cool. Now let's go take a look at the Russell 2000. Russell 2000, right there. I talked about this yesterday. The most speculative of the stock indices in the United States. And so if that's not lifting, then the rest of them are not lifting. And you can see, guess what's happening today? It's lifting. How about that? Now that's been in a sell for weeks compared to all of it. To the daily sell right here. Let's put that in there. And we are just flirting today with the buy. Now, I guess what we did is we stayed in that. We went into the daily buy here and stayed in it all the way up to there. Now we went into the sell there in January 5th and has been in the sell ever since. And we're trying to lift. We got a red dot there, so it's not that much. But look at the weekly. Weekly is trying to lift up. Let's move that over like so. Move that over like so. So you can see that the Russell 2000 is making an attempt to do a little buying in there. They're bottom fishing. That's what they call it. The funds are starting to look around and say, maybe babies, right? So there could be some bottom fishing going on in that. Maybe we'll see a little firmness. And maybe, as I talked about the inflation, maybe that attitude is going to pick up across many, many opinions. And that would be very good, too. So there we go. Douglas, if you see anything else you want to look at, just give a yell. I'm just going to go back to, where was I on that? Oh, yes, we were looking at the British pound. So we'll finish off the British pound. But if you see anything you would like to look at, you just bring it up. We'll take a look at it. Because you never know, you know, what we learn from any of these questions. You know, we all learn something from questions all the time. There's always, you know, there's short answers or long answers. You know, there's information that's important or just information that can be alleviated. Like we go, okay, good. You know, that makes sense, but it doesn't follow at the moment. You never know. So anybody out there, don't be afraid to ask a question or ask to look at a product at any time. You know, just be my guest because we all learn from it. All right, so there's the cable and looking fine. Now from the cable, we jump over to our, what we call the laboratory, the experiment. We go and we take a look at the Turkish lira. So let's do that right there. There's the dollar Turkish lira. and we'll do it up on the Chicago quant charts. We mention it all the time. This is a industrialized nation, and its currency has gone through what they would call hyperinflation. So it's fascinating to watch. Sad to live with, but it is fascinating to watch when it doesn't affect you. And we're learning from it. And you can see President and former Prime Minister Aragon seems to have come up with a recipe that seems to be working very well right now, stabilizing their currency. So we're pretty impressed. Very impressed, to be exact. And let's check that out. GBP CAD, shift GBP /CAD. There we are. Right there, you can see that's trying to, what is it trying to do? Let's see what it does, what it does, what it does, and we'll go look at it on Chicago at the same time. Okay, so it's been moving down. Boy, you can see that. So GBP, which one was it? GBP CAD. Okay, let's see what CAD is. There's GBP Yen. There's GBP CAD right there. And as you can see there, we've been in a weekly buy since, what was that? That was November, the week closing of November 19th. We went into the buy somewhere in the middle of the week. Somewhere in here we went into the buy. And you can see it did its best to go high, and then it went low and still stayed in that buy, and then made new highs up in here. Just January 6th there was the high. And you can see, we went into a daily buy there. And then I guess we went into a sell on that. Let's put that sell in. Right. It was a sell. And then it did the same thing again. It tried to go into a buy for, was that 2 days? It went into a buy again. And wasn't that good a buy, of course, but let's see, sell there. So the first buy was right here. It was a fair buy at best, you know. Right there, we were in the weekly buy. It was a fair buy at best. Just, good money management. You made money out of it. Then the second buy was here. That was a winner, many chicken dinners win. That was great. Then it went into a sell. Couldn't take the sell because why traders? We were in the buy there. And then it went into a buy here. And again, good money management would have given you a very small loss or a very small win. And then it went into the sell. Let's change that color too. It's the green there. And now what we see is it playing with the weekly sell. Like so. Let's change that color there. Like so. There it is. You can see it's flirting with the weekly sell. And maybe it'll come back down if it closes. It's been in a daily sell since here. Oh no, look at that. It did go into a buy for 1 day. And again, another loss trying to steal away one of those chicken dinners you made out of that big long run. So right there. And then it went right back into the sell again. And it's back in the sell again now. So, why didn't that turn green when I told it to turn green? So, right now it's actually trying to line up on both sides of it. And it's basically saying, be short, be short. It's trying to do that. So we'll see how long that lasts. Now let's check out the other one that Douglas was looking for. No problem, Douglas. Like I said, we are always fascinated. In a proactive world, we don't have much of a choice. Anytime anybody asks a question, it's well worth looking at, solely because we're not in a reactive trading world anymore. We're in a proactive trading world. And we try to make that clear to people, most of the time. But unfortunately, people don't exactly understand that perception that I have about it. But I can just say this. I said it yesterday. We talked about it. Basically, what it comes down to is that the exchanges are pretty much gone. The trading desks on major firms are pretty much gone. And so very few trade as a reactive trader. Now everybody is trading like a proactive trader. And that means that you have to go find a trade. And so when I say, anybody ask a question, part of that process of why I'd like to buy some British pounds from you, that doesn't happen anymore. It's so rare. I mean, no one, and that's where when you're on an exchange floor, that's thrown at them. And in this era, it's the opposite way around. You have to go find a trade. Not many of us are making markets. You don't make markets anymore. You're not having customer orders needing to be filled. And so that's why questions. We would rather have people ask questions solely because we don't know where the next good idea could come from. And that's, and that's pretty much what it really comes down to. All right. Now there's the Swiss. Okay, so let's see. It went into the buy right there. And remove that. It's still in the buy. We can fix the colors here. Went into the sell right there, or was it there? I'll tell you in a second. I think it was there. Went into the sell there. Move that over. Went into the buy right there. Move that over. Move this buy over like so. Then it went back into a sell right there. But this was in a sell, so you could place sell. So this was the winner chicken dinner on that trade right there. Let's see. Then it goes into a buy there, so we can move this over. And you don't want to take that buy because we're in a weekly sell. You can see that. Then it goes back into a sell again, like so. Where is it? Right there. Short sides of these trades. So you can see that was a nice little win. That was a fantastic mini chicken dinner win. This was almost a total loss right there. Good money management would just made your loss small. That's all. That means a stop order and so forth. And or using derivatives, one or the other, the options and binaries. The next buy, let's see, where did the next buy come from? Right there. And we were in a weekly buy at that point. So you get another big win chicken dinner one there. We go into the sell there. You don't take it, of course, because we're in a weekly buy. And we're just flirting, I guess you could say, we are just flirting with let's remove that. And we are today flirting with the daily buy as we speak. Whoa, what the heck is that? Let's see, erase, whatever that is. Let's move that over. We're flirting with, there it is, the daily buy at the moment. And it's still in a weekly buy. So if this closes there today, you can try to trade it alongside there. So there you go with the GBP Swiss. Let's see, workspace. Now that'll be interesting to see. Now that brings up an interesting idea. Say workspace like so. There we go. And that is maybe some of the better trades might come as pairs trades against other pairs trades. In other words, other currencies, not dollar and your currency, but say dollar against Swiss or dollar against CAD, or they may be the better trades overall. And that could be what you've done now, Douglas, is by asking the question, you've brought out an interesting idea. In other words, will the dollar pair, will there be better pairs trades between the non-dollar pairs? So in other words, like, look like this, like, the dollar, the cable against the Swiss, or, the euro against the cable, or something like that. They could be possibly some of the better trenders. We'll see. That'll be very interesting in its own right. So you keep on asking these questions, we'll be able to observe them and find out, because, there are so many fish in the sea, and it's awful hard, for me to just chase after every idea. I would never have a webinar. I'd be in my straitjacket just watching different trades everywhere in the world. So it's very important for people to ask questions for us to try to find, in a proactive world, a very, a better trade versus another trade, one trade versus another. All right, where were we? Oh, we were looking at Turkish lira. So let's jump back to Turkish lira. See, Doc can remember and the way to stabilize his currency without plowing a ton of dollars into it, or let's say equity into it. Instead, he's now made the country like a tax line, I guess you could say. They can tax the population. We talked about this yesterday or the day before. they can tax the population to compensate for the free puts that they give purchasers of the Turkish lira. And at the same time, that forces the Turkish lira to have stability, which then stabilizes the industrialized side of the country, which then allows money to grow and equity to grow and freezes out the inflation, which is a very positive thing. So this is an interesting strategy to hand out free puts. It did make the world economy, especially when Mr. Trump was in there, very productive. Right now we're not that productive. And when Mr. Obama was in there, we weren't that productive. But once Mr. Trump got in there and put market forces into the process and cut back on the restraints of growth of industry, we had a very roaring economy and the stock market tripled in value. So, I give President Aragon some real kudos there, because I was the first to say, I said at the Llanos, I was like, nah, this probably won't work. But look at it. It is stabilizing their currency. Look at that. This whole move here has stabilized it. And, if they lock it into the 13 or 15 area, if it starts acting like the Mexican peso, where it really becomes in a tight range, that's a really positive thing economically for the country itself. So, all right. From there, let's see, where do we go from here? We go over to, we go to the Canadian. That's right, the dollar Canadian pairs trade versus that. And let's do this. Let's go back and look at that. What was it? Swiss? Which one was that? Or GBP? That's what it was. It was GBP, right? GBP CAD. There's a GB CAD. Right there. You can see the pressure. The Canadian is showing strength against the CAD, against the British pound. You can see that. Now let's see what it does against the dollar. Right there, doing the same thing. The CAD is showing a lot of strength there. That's probably the oil factor we always talk about. Whenever oil is making money, the Canadian dollar usually is doing pretty well. And then a lot of times we'll see the metals complex join in with that. So you're seeing it in two different pairs trades against the Canadian, that the Canadian is showing some real life. Again, thank you, Douglas, for bringing the subject up. It makes us be more diverse, makes us much more dynamic when analyzing different products. Here, I mean, I go through the montage of the dollar this against the dollar that, against the dollar this, against the dollar that. But it's very rare to take a couple, we do it with the Turkish lira. We look at the dollar Turkish lira, and then we look at the euro Turkish lira. Well, we don't go much further than that. In this case here, the Canadian dollar is considered a major currency. There used to be 6 major currencies in the world. The dollar, used to be the Deutschmark, now it's the euro. It was the yen, dollar yen. They were major currency pairs. It was the dollar CAD. That was a major currency pair. The dollar Swiss and the dollar kroner. They were the major, what they called the majors. And then everything else was considered a minor. And I think the Australian dollar, Australian dollar pairs trade was considered like on the edge of. It almost was a major, but it wasn't, but it was. And, it was kind of like a cross between, And so we're now in a new era where central banks are the buyers of last resort, and they keep everything in line and so forth. Whereas before they were kind of behind the scenes, and the influence was more of GDP and CPI and PPI and inflation and interest rates and industrial, we talked about that, the producer price index, industrial production, that type of thing, so they were the movers and shakers that made currencies move. Now it's more of the central banks keeping things in line. And so, we're in that era of this. So this is a really cool thing, is to look at the dollar CAD. We just looked at the British pound CAD. They both have that same characteristic. Matter of fact, let's go back to that British pound CAD trade. Wonder if it's doing it head and shoulders like it is doing it on the dollar. And that kind of has that flavor to it too, doesn't it? And I wonder if we shrink this up, this could be a head and shoulders of its own, just like it was with the dollar CAD, And so, we might see, these numbers down in here. We might see this thing play itself down. And let's go to the dollar CAD again and see the range. See, we're just playing with the 50 percentile. we might find ourselves moving back down to the lower end of the range, which we have not seen since when? Since May, June of 2001. So about 7, 8, 9 months ago. And it played on that bottom end of the range for like a whole month almost. And then it, came, ran back up here. Then you can see it was up here back in 19. Oh no, that was 20, December of 20. And then it played itself down to the range. And previously, before that, it was played the range also. So definitely well worth thinking and talking about. Thank you, Douglas, one more time. All right, from there, we normally go from the dollar CAD, we'll go over to the metals complex. And we'll take a look, first of all, and the energy complex, what we'll do is we'll take a look at crude oil to start off with. And we'll do that same thing over here on J4X. Right there, there's oil. And as you can see there, oil is just marching its way up. And over on Chicago Quant, you can see here, oil is doing the same thing. It's basically oscillated a little bit more compared to the, not really much. I mean, you can see we went to a buy. Let's contract this over here a little bit. Give you a view like that to that low. Which low we're looking for? This is a low of, was that December, I guess. That's what that is. So it's DEC. So let's go to DEC. There's the low on the Chicago Quant. And you can see it goes into a buy there with that nice long run. And it does a little hesitation in there. And then, gets into the weekly buy right towards the end of the year and still carries itself up. You can see it goes into a sell for just 2 days, and then, or 3 days actually, and then goes back into a buy and fails again for 2 days and then goes back into a buy. So to the great extent, it's been like a, was it like a 10-day run, couple day rest, another 10-day run or 8-day run, a little rest for a couple days, a couple-day run, higher lows, goes back into another buy and another run. So there's a lot of strength there. You can see it matching up with the J4X, and you can see here, how it's trying to constantly be back into the buy, and the hinkies just keep on marching. They don't care. They just keep on marching. And so that's where we are now with the energy side of it, and that's why we see the strength in the Canadian. And then the other side of it is also the metals complex. Let's see what gold looks like. And gold has been more of a sideways pattern, as you can see there. It tries to lift and stalls, and it tries to lift and stalls. And then let's check it out over here. There's gold there. Let's see if we just move this over. We'll do it like that. There we go. And you can see here it's been trapped in a very tight range, 1770s area to the 1820s, 1830s. And you can see it there, same thing. There's the 30s there. There's the 1760s there, 70s, that type of thing. It's been kind of trapped. In many ways, you would almost, I don't know if you could call that a reverse head and shoulders. It's just a shelf. Sometimes they call it a shelf. Sometimes you see a triangle. Sometimes you see a channel. In this case here, it looks like it wants to go up. We always, that hope and dream we see here all the time of, will this metal thing take off? And it just refuses. And maybe it's going to build a big base, and then and maybe it's like it's saying the jury is out. It doesn't know yet if the inflation is real or if it's if it's short-lived. Maybe the metals in the end result is trying to tell us the same thing I suggested this morning, and that is to measure inflation in the 1970s or early 80s, and try to measure it today is two different animals. They really are. They're one's an apple, one's an orange. Two different fruits. And trying to measure the inflation of the 1920s to the 1930s, is again two different fruits. It was more of the 1970s problem. It was leadership of government and policy of the government, and 1920s, 1930s, and same thing, and it was at an extreme at that point. And you can see today, You know, the inflation today may be just a totally different creature altogether. I think it is. I really do. The more, you know, because as I've said in this webinar and many other webinars, our financial system doesn't look anything like what it looked like back then. You know, it's much more modern, much more efficient, much more productive. You know, information moves at such a speed that we don't have to wait 2, 3, or 4 or 5 months. We see it in 2 or 3 or 4 or 5 minutes now. A little sip of my tea again. So that is that. Let's jump over to the South African Rand, see if that thing is drifting slowly down. Where's that ZAR at? There it is. Dollar ZAR, yeah, heading towards the lows of the last 2 months. You know, I mean, it looks like it took out that low there from the 13th, which is 1526.28, and today's low is 15. No, it just missed it. It's at 1530 versus 28. So it looks like it's trying. But you see, our daily is trying to roll over. It looks like it went into a buy yesterday, and we had a volatility signal, and you can see it's in a weekly sell. So that pressure is probably the downside more. Now let's take a look at it over on J4X, the Manhattan indication. There it is right there. And I need to write something up for Giannis. Get that thing all figured out. Douglas says they did not have a Bitcoin. No, not even close. There was no cryptos at all. Like I said, it took 2 days to clear the British pound. You bought British pounds, and it took 2 days to get it into your account. Now I can get British pounds into my account in a matter of seconds. You know, you bought the Japanese yen. It took 3 days to get it into your account. It took 5 days to clear a check from one bank to another, unless it was a wire. Okay? Look at the difference there is today. It literally, within seconds, money is moved from one account to another. And it's very few seconds sometimes, like 2 or 3. So, yeah, there's a whole different genre of finance going on right now. And so, you know, you can really see it that this inflation could have some short life to it. And you know, there's just the whole physical dynamic that's been cut out. The wait and see, the check in the mail, that stuff has been cut out to a great extent. All right, from there we're going to go over to the ruble. I saw the German government told Russia if they invade Ukraine, they're going to get rid of the pipeline. So that's another economic push that we're not seeing from Monsieur Biden, Mr. Ooh la la Biden. The man has an issue about many things. And I think they're going to all come out over the next 9 to 10 months. Over the next year, we're going to see some really crazy stuff. I have my doubts that Mr. Biden can make it through his 4 years. I think they're going to end up retiring him somewhere in between. It'll be like Richard Nixon. He'll be going out the door after a couple years. I think right there you can see this is the ruble. Let's put it up on J4X there. You see ruble's trying to do its bouncy thing, but over here on the Chicago chart, you can see that there. Ruble is not so quick to do so. Not so quick. It's actually pushing into a daily sell. You can see the weekly is still, it keeps on flirting with a weekly sell the last couple of weeks, as you can see here and there, and now again here again. It's trying. You know, maybe the adults in the room will straighten things out. The Democrats are at their Waterloo at this point in the United States. I see now Schumer proposes taking a filibuster, talking filibuster to save bills. They really are lost and going nowhere. Mr. Schumer, who is the majority leader in the Senate, has no choice because the socialists are threatening to remove him if he doesn't do what they want. So he will dance this tune until tomorrow, until the cows come home, as we say around here on the farms. And so that's where we're at. I just saw that headline. Oh boy, that's a conversation I would love to hear. I would love to hear that conversation. All right, from the ruble we go over to the Japanese yen. All right, let's see, right there. And there is the yen. You can see the yen pressing down, but still not buy. And you can see here over on J4X, probably the same action, a little slower, but it's still the same action. And this Manhattan indicator is the best out there when it comes to public indicators. So it's well worth watching. You see it's in the buy also, doing the same thing as the Chicago one is. Our weekly is holding up firm. So we're not seeing anything too damaging going on anywhere. And it's just a matter of time before we, see. Like I said, I think there might even be a good dollar pair. There might be some really good trades out there in those areas. All right, last one we look at is the Mexican peso. Let's check that out. Right there. And let's see. There it is on J4X. Boy, it's been riding down nicely, hasn't it? And let's check it out over here. Where's it at? Right. Where's it at? Right there somewhere. There it is. Yep, you can see that same game, It's holding up very well there. The peso is whatever is going on it's kind of whatever Mr. Biden did to freak everybody out. It seems to have passed now. He did something. He shook that whole marketplace up there. You see the big spike from it, and they are in a great position to benefit from a strong American economy. He must have threatened something. I don't know. Who knows with him? He's so weird. He's so weird. He's so weird. I don't think I can describe it any better than that. He is so weird. So, all right. What else we got going on here? Let's see. That's it for those currencies that we look at. And from there we go over and we take a look at the metals complex. We can do that. We've already seen gold, and silver, and oil. Why don't we do this? We're getting towards the end of the webinar, so why don't we do this? We'll look at the 4 stock indices. We've seen 2 of them already. We've seen, where is it at? Right. Oh, let's show you silver, though. Let's show you silver. Right there. You see silver is acting very firm in here, heading for the $24 area. It's like a 2-month high, or maybe, yeah, almost a 2-month high. It's like a 6-7 week high, which is pretty cool. And that's silver. And then let's take a look at the Nasdaq, or the Tech 100. You see it's trying to bounce and lift up too right here. You see the weekly is trying to get back into the groove. And then let's take a look at, what's the other one here? Let's take a look at, let's put it up on J4X too real quick. Where's that mousey on? Oh, mousey. So that is Shift USD. Let's see, where's that symbol at? shift US, let's see, CH. So it's USD. No, it's USA. That's why it didn't jump up real quick. That's what it is. USA TECH. There it is, right there. And that's the Tech 100 on Dukascopy also. Let's see. And there it is. You can see it's how it's been pounded down. And we're just starting to make that turn here on it right there. You can see that. And next thing you know, a couple hours from now, maybe the green hinky will start. And next thing you know, that's where we'll be. You know, it'll be that. And then, you know, maybe they'll do a little bottoming. You know, maybe there'll be some bottom fishing. Douglas made us take a quick look at the Russell, which showed us seemed like some type of buying going on in there. So if they do start to lift that, that could be, you know, a whole new flavor of it all. You know, because of the way we're. And that is that for the moment, I guess you could say there, traders. Let's take a look at the Dow Jones Industrial Average, and then we'll get out of here. Right there, trying to do the same thing. It's trying to do its little bounce. Went into the weekly sell last week. We fell down, and it's trying to lift. The old line stocks, you know. So that's always a positive thing there. They all try to do their thing there. All right, traders, we're out of there. This is Doc from North America. See you tomorrow. It's already Thursday for us. We've had a short week. So, happy trails to you until we meet again. Happy trails to you, to all our Dukascopy trading friends. See you around the farm, traders.